All right, what's going on, everybody? This is Ryder. Hey, how you doing? It is a lazy Friday for sure. Um, just been kind of working with some app developers on stuff. Didn't really get much trading done, but I mean, I was scouting out some stocks that I liked, but I mean, for futures, I didn't get anything done. I am a big fan of quality over quantity, absolutely. But a lot of trade strategies perform better with a high volume of trades, like credit spreads. You can stack them things up like crazy. When I was new, I had nothing less than 150, 200 trades on at any one time, and they were small. Like the entire trade would be 50 cents wide, and I would have like 15 cents in credit, that kind of thing. 30 cents, maybe on the other side. So really small trades, but just stacking them up because it's all about the occurrences. Like you don't really have a good batting average if you only swung the bat twice. So the more occurrences, the more realistic the probabilities are. But it's also hard to do. You got to stay really diverse too, and that's where a trap often catches people because if we're in a bullish market, it seems like every trade you have is long, and if you're stacking up 150 long trades, if we go down, they're all going to lose, right? Like you got to really diversify when you're holding a lot of stock, and that makes it even more complicated to match what you were talking about. That it's a lot to juggle, and it's easy to get overwhelmed. I like to add new ones when I've adjusted a current position to where it can't lose anymore, and I just throw it on the stack and ignore it. And that way I don't even have to monitor it. I don't even have to look at it anymore. Well, it's good that you know yourself. I think a lot of traders, they don't know themselves yet. They don't know where they're going to break or where they're weak, where they're strong. The topic today kind of fits into that. We have some bots on the Discord that can help people, and you don't have to buy anything. We already pay for it at the Bullish Bears, so you just get it as a part of your subscription. And some of it is automated, so it doesn't require you to do anything at all. You can just keep your eye on the channel, and when things pop up, then you can apply a little bit of due diligence and see if it's something you like. The other part of the Discord bot is interactive. You can use it to set alerts, reminders, check charts if you don't want to pull up your app. If you're out on the run and you don't want to load your phone with a bunch of trading apps, you can use the chart commands on Discord to bring up a chart to see what the stock is doing, and you didn't even have to load your broker. It's got a lot of really neat stuff. So on my screen right now is the TradingTix website. And unfortunately, while you have access to the bots, you don't get access to their platform. It's a really cool platform. It has great features. I use it all the time. But built into the Discord is the bots that belong to this company. They have their own YouTube channel with a lot of videos that explains how to use the bots and what the bots are doing and what the scan settings and parameters are. But if you look in the Discord, scroll down and you'll see a spot that says scanners and bots and then trading ticks. Just kind of skip the scanners and bot ones. We've got a lot of other bots in here, but over the years, we've let them lapse, or the initial free period that they gave us has just expired. And we don't have a lot of extra capital to keep all those bots going. So we're not really using those. But the trading tick bot is fully active, and that's where you would want to go. The user area, if we just jump back up here really quick, it does have a self-use area so that if you did want to use commands, that's where you would do it. Me, I have permission to run commands in every channel, but you probably don't. And that's because we don't want a bunch of people sitting in main chat just spamming out a bunch of bot commands, interrupting the flow of the chat. But outside of the self-use area, you have all of these, and these are already configured. All you have to do is poke your head in there and take a look at them. If you've been around for a while, then you already know what they do. But if you're new to trading and you haven't seen this stuff before, you might not realize that the name of the bot itself gives you the clue as to what it is. Like golden sweeps, that's a industry standard, like 10,000 contracts with plus 7 days to expiration, and it has to exceed the open interest that was already on there, right? Like there's some rules in place. Then there's things like the stock breakout. I love this one. It's a channel that I frequent if I'm looking for new trades and I'm just kind of poking around to see what's moving, because it's just showing you a chart with a time frame, maybe an hour, maybe a day, but it'll tell you. And it just says, hey, this stock is breaking out. That's it. It's not telling you to buy or sell or anything else. Just, hey, this stock is breaking out. Okay, cool. Gets my attention. Maybe I dig a little deeper. Every one of these channels has a purpose. And the cool thing is, if it doesn't suit your purpose, well, you just don't worry about it, right? You just ignore it and leave it alone and do something else. And blocks and bullseye and crypto stuff, dark pools. I believe they've got, yeah, there it is, inside trading. It always sounds bad when we say that, like, oh, insider trading. Not that kind of insider trading. If the CEO registers to sell X amount of shares or he registers to buy X amount of shares, then he's considered an inside trader. There's nothing shady or illegal about it. It's the same name as the other kind of insider trading. So we probably need to find a way to differentiate those two, but it's the good kind. It's just looking at who in the company is trading large, getting rid of something, getting more of something. And that's what insider trading is. It has news too, but I got to admit, I never look at the news one. And then there is usually like an upgrade, downgrade. There it is. So you can see if a stock is getting upgrades or downgrades. And I like how they stack it. Here, for an example, with Domino's Pizza, it has three different upgrade areas. So in one, it was telling you that they were moving the upgrade from, say, up to outperform. The other one might be that they were just holding the previous upgrade and they haven't changed anything. Or if maybe if they flip it around and go the other way. And so if you find a name and it's getting a whole lot of attention that day and everybody's throwing on new upgrades or downgrades, then it's just more information. All of this information in one spot. It's really nice, handy. Now I always get people asking, well, should I trade these? Well, I mean, they're not necessarily trade ideas. You could consider them that way, but I certainly don't. To me, they're just what's getting attention out there and how much attention is it getting? Here's a bullseye trade idea. Now, that actually is a trade idea because it has it in the title, trade idea, and it has a probability connected to it. What is the confidence of this trade? How confident is the AI that this trade is actually going to work out? You could aim for the high probability stuff, the 80s and the 90s. You won't get a lot of 90s, probably won't get a lot of 80s, but mid 70s should be okay. Um, but to me, it's too gray. It's too vague. Where are they getting their probabilities? And, what's the statistical error of margin? It's just too many unknowns. So to me, still not a trade, but it can point you in the right direction of what strike are they trading? What expiration are they trading? How heavy are they trading? This sort of information can, again, lead you in the right direction. And it doesn't cost you anything. There's a lot of stuff out there that you could go buy that would be better than this because once you buy it, you can adjust the settings and mess with the parameters. You don't get to mess with any of these settings, but it doesn't cost you anything either. So, with all of these different channels, you can start to use the search bar up at the top. Say you're looking for Goldman Sachs, and if it's getting scalps and it's getting golden flows and it's popping on the bullseye and it's got the stock breakout and it's all Goldman Sachs, well, it's getting all of these different triggers and all of these uh, different components are all saying that Goldman Sachs is getting attention. So it can help validate your bias. It is worth taking your time to go through all of these channels. And on their website, they do a relatively decent job of explaining what those are. You can see I'm not logged in and I'm on the TradingTix website. Up at the top, they have a really cool blog. In their blog, they talk about various trading strategies. So if you're considering maybe starting a new strategy, check out their blog. They talk strategies in their blogs all the time. Then they've got the FAQ channel. Now, this FAQ channel is searchable, and you can go through all sorts of stuff in here just asking it questions. And it also has the bot area to ask questions. So that's really cool. If we go back out here, though, I believe they've got a section just for the bots. And yeah, right here down in this area, Discord bots. So if I click that, now they're going to talk a bit about their bots. And I believe they got a page where it lays out. So you don't have to pay that. We pay that. They should have a section on here that lays out what each one of those bots does and which ones are interactive, meaning you give it a command, versus which ones are um, self active and they'll respond when their criteria is met. I didn't see it. I didn't see what I was looking for. We want the Discord bots. Let's try it from over here. If I have to, I'll end up just taking a picture. Yeah, you see, I'm not logged in. So you don't need to be logged in to get here. I'm going to just throw this on the links that I've been collecting for you guys. Trading Tick Discord info page. Maybe I already had it. Yeah, I already got it. So I'll be sharing these links with you guys when I'm done. But here is the Discord bots. Now these are auto posting, meaning you don't have to give it a command. It'll just post when the criteria is met. And then these are the bots where you perform an action, you ask it a question, and it gives you an answer. The thing that you ask might just be, give me a chart. Like that might be the extent of it. Just give me a daily chart, and boom, you got a daily chart. But you can also ask it for lists, say the top volume or the biggest gappers or whatever your query may be, largest dark pool trades, largest block trades. There's a lot to choose from here. 4 across and 4 deep. Maybe even, yeah, even much more than that. There's a lot to choose from. The command is in here, but don't think that you have to sit there and write out a whole big old cheat sheet on every one of these commands, because you do not. If we come down into the self-use area, which is what you would need, self-use, in this area here is where the bots are at. So I just hit the backslash here, or the forward slash, and this is the trading ticks icon. These are all the bots on the side here. Just scroll down until you get to the trading ticks bot. And when you click on it, all of these commands are the commands that you have. So you don't have to remember any command. You can just click on this, scroll through the list to find what it is that you're looking for, and then click on it. It's going to guide you step by step through the whole thing. So I chose Gex, and it says, give me a symbol. All right, we'll give it a symbol. Hit the tab, because we can say it says +1 more, which means if I hit tab, there'll be more things that it might offer. And now it's saying, what expiration do you want? Well, how do I know what format to use? It says it right there. So if I want a specific expiration, say today, then I could have just backed up and not used expiration, and it would have gone ahead and given me today's. But let's say I want next week's, which is OPEX, then we can use year, month, day, right? So 2026, January, what did I say? 16? Yeah, I should know that. 16. If there was more choices to that command, it would have said +2, +3, +5. And you don't need to use all the choices. You can just put in the first one, and whatever you get, that's it. This one has 3 choices, but you could just do spy and hit enter, ignore the other choices, and if it finds something, it'll bring it back to us. So these bots can be really helpful. You can also use the bots in the Discord for reminders, for price alerts, all kinds of things with these. If you're at the computer all day like me, then you probably don't need a lot of those features, because I'm right here. I can see my computer at all times. I got the charts up. I don't need those. But say you're out running around and you just want to get notified when a stock hits a particular alert, and you didn't have time to set that before you left the house, well, you can just do it right here on the Discord. It's pretty handy. There was questions about the pictures that I had posted earlier in the week, and they weren't actually pictures, they were commands, right? So if we just kind of scroll up here a little bit, a lot of times in the mornings, I'm focused on the charts that I have up, and I don't necessarily want to change what I'm looking at on my computer. So I'm always watching the Discord. Um, Rather than changing my charts, I just go ahead and I call up a chart here on the Discord. It's really handy, really helpful. And when you get familiar with it, or you get used to doing it, it's a really simple process. You can do it really fast. So I'm jumping back into earlier in the week, because this is what they were asking about. Yeah, you should be able to forward, right? Use the forward slash, type in the word alert, and you can set a list of alerts or just a single alert. Um, you would need to know what it's going to break out of, right? You can't just make a vague alert that says, let me know when any stock out there in the world is breaking out. but you could say if Apple breaks out above whatever level, then let me know. You could also go to the breakout channel and set your permissions there to notify you if a new post comes in. That would make it easier. There's some of the charts that were was that? I believe it depends on your device. For me, since I'm always at the computer, it pops up in the lower right section as if somebody had messaged me on Discord. I don't know what it looks like on your phone, but I would believe it would look the same way as if somebody just messaged you on Discord. That's a good question because if you set alerts on Thinkorswim, it can send you an email, it can send you a text message, it can do both of those and pop up on your computer and pop up in the app itself. And it can do all four of those. So it's a really good question. Discord's a lot more limited than that. So earlier this week, I was looking at things like Capital One financials here, and I was just using the app to do it. That was a weekly, and this is a daily. It's the same company, right? And you can see that I really didn't change much. I kept the MACD on there, and I just asked it for a daily chart and a weekly chart so I could see what Capital One looked like on multiple time frames. Here, Texas Instruments weekly chart, same thing. I just called for a weekly, or here with the chips, I just called a weekly chart, and that's really all I was doing, shopping around, looking at the stocks that were hitting that day. They were getting flow, they were getting attention. I wanted to see what their charts looked like. So I was using the Discord to show me those charts. This is UPS weekly chart. We could see the MACD coming up. We're starting to do that trend line breakover, really slow, big scoop pattern on the weekly. I like UPS for a long trade, by the way. I think it's got some real potential. You got eBay and URI both with that same pattern, that little mini scoop or micro TRB, whatever you want to call it. But eBay had that sharp decline first, and now it's trying to build back out. And in this picture, it needed to get through the midpoint. URI didn't have that, and I really like URI as a company. Their options are junk, just complete trash. So you basically got to trade that thing on the stock side, and it's really expensive. So while I really, really like URI, I don't mess with it much because it's an expensive stock and it has really bad options. So the ask was, how can I use all of this to find tradable ideas? Well, that they already found them for you. You just have to validate the ideas that you found and see if it meets your criteria. You have all of those channels down there. It's going to bring you things that are getting breakouts, sweeps, unusual options activity, and you can use the other channels to see if there's anything that is causing it to happen, right? So if something is showing up in the golden sweeps area, for an example, and it's getting hit over and over and over again, that's what I like to look for. Repeat unusual trade activity. We can see TSM, TS. There was another TSM. I thought no, it was Tesla. I want to see repeat activity like these two, Microsoft, Microsoft. They're both the 480 strike. They're both the Feb's 20 expiration. They came in really close together. This is the bigger one, 2.5 million. This is the smaller one, not even 1 million. And I want to see that they're, working together. This is just two, but imagine that you've seen 4, 5, 6, 8, 10, 15 of these come in just again and again and again and again and again. Tell me that isn't going to get your attention, right? $2.5 million per set, and it's hitting 10, 12, 15 times through the afternoon. It's good enough for me, right? I'm going to trade that. Are we going to get that every day though? No, no. Good things like that aren't just going to fall in our lap every day, but you can be on the lookout for it. It doesn't hurt to hop in the channel, see what's getting hit in there, set alerts, or set your notifications for that particular channel to actually register a noise when something new lands in here, you can also search for names. So if I was to search for Microsoft in the upper right, these would show up in my search, which means if you're watching your own charts and scanners on your broker and you see a name that you like, you can hop into the Discord, type that symbol in the chat up here, this search bar, and see if the symbol that you like is getting unusual options activity, has news, has dark pools, whatever, because these will all have that name if it's registering for them. And that's really helpful too, right? So the idea when it comes to, let's bring it up so I say it correctly. What made me look at the symbols that I was looking at in those pictures? I think this goes back to the idea of trying to develop a watch list or trying to find tradable opportunities. I have found over the years that I cannot put together some sort of scanner or list of seeking tools to find me the kind of charts that I want to find, right? Some of those charts that we were looking at in those pictures. URI, for an example. Let's just scoot this up. What I have found is if I want to find something that looks really good, that has a nice clean chart, scanners won't do it. I have to manually go in and hunt around through my watch lists to find the kind of really pretty chart that I'm looking for. It's the only way that I've been able to do it. I'm sure there's somebody out there who's figured out a way to find the absolutely beautiful charts by some form of scanner or system. But for me, it's having a list of stocks that I want to trade or that I would trade because I'm picky about what I'll trade. Liquidity is a really big deal. If it isn't meeting my liquidity needs, then I don't give a damn what it's doing. I'm not trading it. And there's only like 300 names that meet that criteria. When we get really crowded, that's less than, say, 200, maybe 200 names that meet that criteria. It's a short list. So it's not hard to go through that short list and every day looking at those names. It also gets to the point where it's the same names. You know them, who their CEO is, how they're doing in their earnings, when's the last time they really screwed something up, who their competitors are, right? Headlines that get your attention. I read a lot of headlines, I keep track of a lot of news, I play a lot of thematics. So I keep track when I see things like Um, the SMRs, that's a theme that's been running really good. Meta with OKLO this morning, that was headlines. That meets the same criteria that we've been looking at for, the last year when it comes to those SMRs, small modular reactors and the nuclear plays and all the big dogs like Microsoft and Google and Amazon, they're all wanting to get their own nuclear power plants. And so that's a theme, right? You keep track of those particular names and that particular theme in that space. And then you get to the point where they are a known thing that you're keeping track of. You're not going to be able to use Tradie Ticks to just develop this amazing list of stock charts that have a really good pattern or setup to them. Instead, what I have found is that you go through a lot of stocks, and when you find ones that meet your criteria, you add them to a little list that you don't get rid of, right? Call it your whatever list. It's your master list, I guess would be a really good name for it. And along the way, as you grow as a trader, so does your master list. You can get more particular about the categories within that master list, which is one of the reasons I like TradingView. On Thinkorswim, I can build a watch list, no problem. But let's say I put 50 names in it. I can't add little groupings in there to separate those 50 names. You know what I mean? Like you just get the 50 names and you can sort them by their sector or their industry or their price. You can put them into alphabetical order. But on TradingView, you can add these little cards in between the lists, and then you can, have a really nice list. It's broken down into sections and categories like this list. This is I call it my work list, but you could call it your master list, whatever you want to call it. And you can break them down, right, into different categories and subcategories, and it's really nice. I wish Thinkorswim would do that. So over time, you just slowly build out this master list of stocks that meet these criteria: swing trades and long-term trades and buy and holds and baggers and whatever, just build out your list. Then you can use the Discord to call up the charts on those to see the unusual options activity and the dark pool prints and the GEX flow and all the other good stuff that the TradingTix tool can provide. Now, yeah, of course, it does help to have strategies, but even the most simplest strategy, say like a breakout, just about everybody, even a new trader, understands what we need with a breakout. So it's a pretty simple strategy. We're looking for price to go into uh, new highs on the week, new highs on the month, 6 month highs, yearly highs, all time highs. So it can be a breakout of any proportion. Jump out to your daily charts, find the high that matches your needs, whether it's all time highs or 52-week highs or whatever. Just, right click, set an alert, or however you do it on your broker, or set the alert in the Discord. Now you've got an alert set for a stock that's going to break out. Just as simple as that. You can start adding in more things. Sort your list by stocks that are above their 200 period moving average or below their 200 if you're looking for maybe some bottom fishing plays. And then you slowly just get more and more familiar with the stocks that you trade. I remember when I was newer, people would tell me you got to really do your due diligence and understand the thing that you're trading. And of course, I understood that I was trading a breakout. What more do I need to understand? The thing is, the name of the company, what that company does, why it's breaking out, what its peers are doing, what the rest of the industry is doing in relation to that one name. If you don't know any of those things and it's just this random stock symbol, then how do you know that you should buy the breakout? Investors Business Daily is one of those places that loves the breakout. And I like getting an account there. I rotate through with Investors Business Daily, usually every other year or so. But that's their number one trade strategy is the breakout into all-time highs, preferably, is what they like. And I always thought that trading breakouts into all-time highs must be a personal preference. It has to be. Some people want to buy it on the highs, and some people would just rather short the damn thing. But that was when I was new and I didn't quite grasp the nuances of what they're doing over there. They won't buy all-time highs in just anything. It has to meet all of these qualifications that tells them that it's a really good stock and that it's headed to the upside more than just because price said so. Right? They've got institutional participation and they're looking at the peers and who's got the better peer group and how much money they're making, and they got all of these criteria to make sure that they're only looking at really good companies with a solid balance sheet, strong leadership, good institutional participation, and then it's breaking out into all-time highs. Well, damn, that really changes the game, right? Because now we're just not looking at a stock chart. We're actually understanding the why behind the stock move. When you're putting your list together, especially if you don't know a lot of the names, you have a lot of work ahead of you. I don't like to rotate through other people's lists because I don't know every company out there. You know what I mean? Like there's a there's a lot of companies. I don't know them all, and I don't want to trade names that I don't know. So I like to stick to my list because I know the names that are on it. And when I add a new name to my list, I go and try to learn about it. I don't know every name on my list as well as I would like, but that's the idea, right? Is that you slowly get more and more familiar with the names that you put in your list. And when it's time to shuffle them and you take something out and put something else in, now you got work to do, to learn the new name, figure out what makes it tick, how it got to where it is today, and what you think it's going to do in the future. That will be really helpful when they do investors day conferences or big Las Vegas events. When they get closer to earnings or they're going to have a dividend, you'll be a much more informed trader and find tradable opportunities because you already know about that company. Popular CEO type companies are fun, but they can be helpful too. Like Tesla's got a really popular CEO, but so do a couple of the banks, like Jamie Dimon. He's a name that's really big. And then you've got these big activist investors or just really loud investors that are out there. Kathy Woods is one that is really popular. Doesn't hurt to get familiar with what they're doing. You don't have to copy their trades. You can just see what are they doing. Kathy, she's really a prolific sharer. She will share everything. She'll tell you everything that you want to know. Their long-term outlook, why she's getting into something, how much the allocation is, what their forecast is, which is usually like 2 decades out. But she'll share just in a massive amount of quantity of information that you have to shuffle through. But they can give you new trade ideas doing that, find new names. So to use the Discord, use the / command, and the choices for those commands are in the menu item, right? So go into the self use area, hit the /, pick whatever Discord bot you want, which at this point I would recommend just use TradingTix because a lot of these others they don't function. Once you've clicked on TradingTix, all of those commands you can see on the right hand side, it says TradingTix. You can choose the command that you want. And if you want to know more about it, they've got their YouTube channels, they've got the descriptions on the website of what each one of those does. And yeah, you can really pimp it out. That is the Discord bots. Now, I copied down some websites just to make life a little bit easier. This is a video from YouTube. I believe both of those are videos from YouTube. And then the ones down below are informational web pages. And they've got entire playlists of videos if you was to go to their YouTube and check it out. I just grabbed those two videos because they were specific to the Discord bots. A lot of their other videos are more about the website itself. So maybe if you hunt and poke around on their YouTube, you'll find more Discord stuff. But those two had their own playlist, so I grabbed them. What else you guys got? Yeah. No, that's from Spot Gamma. Yeah, it's dealer flows. Let me get logged in here. Yeah. Yep. That's absolutely right. These there's there's two really big dealer flow products out there. Um Spot Gamma is one and Volland is the other one. And every morning I come in and I grab the founder's note right here and then I share the integrations. So it'll say Spot Gamma Thinkorswim levels. That's what the text document says. Then there's two other ones that I share, and that is from a company called Trader Volatility. So in the Discord, for anybody who's wondering what he's talking about, every morning I share this. So we'll just scroll up to like today. The name of the file is down here at the bottom. So this is the OEC Thinkorswim levels. This is the OEC levels, and then this is the Spot Gamma levels, right? Now, these two, the one from TradingView and the one for Thinkorswim, those come from a company called Trader Volatility. I got to bring those up on the website here. It connects to an account that I have at stockcharts.com. And I mean, it's a really good service. I really only use it for this one thing, and that's all I use it for. But they have a lot to offer. If I was paying for it, I would probably use more of what they have to offer. I know how bad that sounds, but I get it for free, and I just want this one thing out of it, which is good that I get it for free. 'Cause it would kind of suck if 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 I had to pay for it and I was just using that one little bit, that would suck. So let me get logged into it, and I'll bring it over. All right, maybe I signed in on the wrong account. What am I signed in on over here? Oh, yeah, that's the right one. I think it's just because I booted myself off of one. Yeah, that's what it was. All right. So this is a company called Trading Volatility. And while they do have a lot of amazing tools, I just go to my watch list and it's this nice, big, spread out list like this. And if you read across the top, which I'm sure is really hard to do in the live stream because it's even hard for me, and I'm sitting right here staring at it. There's a lot of different choices, but there's call wall, put wall, gex points, call skews, all that good stuff. And then down here, this is where I choose what names I want in the list and where I download those two pages that I share every morning. So every day I come in and I click this button, it pops up with the code for the day. I copy the code, put it in a text document, send it out to you guys. That way you can load it onto your trading view and your thinkorswim, and it's my stock list. um, One of the names that I had in here went goofy a while back, and when one name breaks, it breaks the whole list. And I had to wipe the whole thing out and slowly repopulate it a little at a time. I got this far and I decided I wanted new names, but I don't know what new names I want. So I've left it open. When I get to the point where I want a new name, well, I've got some space left. But yeah, that's one thing that sucks. When one name breaks, boy, it just breaks the whole thing. And you don't know which one it is. You just have to go through one at a time. I can't even remember now which name it was that broke because I had to just scrap the whole list and start over. It sucked. So yeah, that's where those come from. And they do have a lot of really cool tools. But I Sadly, I'm just using that one. The really cool thing, if you do want to learn that stuff, there's some amazing free resources. This is the Spot Gamma dashboard, and they have all of this information that you can get a hold of, and it's free. It's not behind a paywall. So this is the Spot Gamma Support Center. I'm not logged in, and you can type in anything you want, like put wall, and be able to see their article about the put wall. Of course, they're going to slant it towards their tool and their put wall and their levels, but you can still read about like what's a call wall, what's a put wall, what's this, what's that, and it's all free. Of course, they have their own YouTube, and this is a go-to for really just anybody that wants to start digging into dealer positioning. Spot Gamma is a great resource. It doesn't cost you anything to just go in and read through the material that they have, you know. So that's a good one. I'll just share this page right here because the Academy and the resources is right at the top and it has a better URL rather than trying to share that other one, which looked like my cat walked on the keyboard. So I'll just put this one. Yeah, absolutely. They're the black box stocks and Cheddar Flow and Big Short and all those guys. They're looking at options positioning mostly from the trader side, like what is being traded, and that could be retail, it could be big funds and firms, institution. It's pretty much anybody who's trading anything, but they're not specifically breaking out and saying this is institutional flow. Now, Volland, on the other hand, that's the only thing that they focus on is the institutional flow. Spot Gamma will give you the institutional flow, but they have a lot of additional resources that'll give you the quote just the flow, right? Which is pretty much anybody. So you got to pick what suits your needs. If you're trying to day trade and catch unusual options activity like some Tesla scalps or, something like that, black box stocks, cheddar flow, those guys are going to be key. But if you're trying to use options data to identify where institutions and market makers are positioned and what their forced behavior is, then you're going to want to use something like Volland and the other side of Spot Gamma. Because those dealers and fund managers like the VC funds and the CTAs, they're what we call non discretionary traders. They don't get to choose what looks hot, what doesn't look hot, how big they want to go. They're forced to buy or forced to sell. They're forced to hedge. They don't get to choose. And we can monetize that when we can clarify their actions. It's not always easy to clarify, right? They might need 900 million long and 800 million short. You know what I mean? Like it can be as muddy as that, and it's never even that clean because there'll be spreads and hedges and splits and all kinds of stuff all packed in there with massive size. Then there's the concept of what do we think they're going to do based on positive and negative gamma environments. It does to a no, absolutely not. The say the dealers are heavy, net heavy by 900 million and they need to be at zero by the end of the day. They'll work through the day to get to that zero spot. They're not going to get it all cleared up in the first hour or even the first 30 minutes. It's going to take them all day long. A lot of times, a lot of times they have they're not going to react to what's happening. They had a plan before the day even started. They know how much they need to unload, and that's what they're going to work on doing through the day. On the screen right now, I'm looking at vol land, and we can see the spot vol beta. We can also see the delta adjusted dealer spread, the GEX target for the day. Now that will update if GEX moves, the target will move, but they'll have a paradigm. That's their word, not mine. They'll have a paradigm of what environment are we in? Are we in a positive environment, negative environment, what they call a Bank of America environment? And they've got white papers that explain what all of that is. But then they look at, okay, now what should dealers do if stock breaks out? Are dealers going to buy into that breakout or are they going to sell into that breakout? Conversely, if we break down, they have a paradigm and they'll ask the same question. We're selling off. Are dealers going to sell into that sell off and make us fall farther and faster? Or are they going to buy into that sell off, halting it basically, or slowing it down and possibly bring us back inside for the day? Knowing where we're at in the delta regime or whether we're above and below positive and negative dealer gamma is the key to being able to answer that question. That's what we use these tools for. In the spot gamma founders note every day, the founder has the PM edition from the night before. I share that in the chat. And then the AM edition, what they are looking for today. And in that AM edition, they very often are going to give price targets and reasons to believe that we're going to break out and run or fail to break out and stay in the range. And they'll have a really good argument based on their tool. So that even if you don't have their tool, or even if you don't know how to use their tool, they're using their tool and giving you their input on what to expect. The PM edition often will lay out trade ideas and it will look back on the day and review what happened and then use their tool to say, yeah, look, at this point, We broke out, we had this sort of flow come in. We could see the dealers shifting their position here, here, and here. And so you learn more about how to use their tool because the founder is using their tool, showing you what he saw throughout the day. So it's a great learning tool. If you don't read it because maybe you're new to options and it seems complicated and it's all just over your head, well, you won't get anywhere unless you just get immersive. So read it every day, keep track of the stuff that you don't understand, and use the support center or ask me. I can find resources to find answers to what you don't understand until it slowly starts to make sense. And it's complicated stuff. So if you don't get it, don't feel bad. It's not like you just wake up and read a book and you're good to go. This stuff is complex. It's going to take time and you just have to immerse yourself in it. And having the examples from the founder really does help. They can, they can. It depends on who you're using. Some of these guys will put a 0 day call wall on, like Mentor Q has. Some of them is using the OpX 0 day or the OpX put call walls, and those aren't so fluid, right? So um, in the mornings, I share this image only if the call wall and put wall changed. And what that should kind of highlight is since I'm not sharing the image every day, there the call wall and the put wall has stayed in the same spot day after day after day. So I'm going to scroll back to where that image is. I had somebody say I should share it every day, but to me, if it hasn't moved, then why should I share the image? But you can track where the call wall and the put wall is on a day-to-day basis if you use the platform like I do. So you can see the call wall, it hasn't changed. It's been the same spot every day, every day, every day. So in this picture, the call wall had not moved, but the put wall on the overnight was up here, and the next morning when we came in, the put wall was now going to be back down here at its previous level. So that put wall, when it was back here, we went days where the put wall didn't move and days where the call wall didn't move. They were just in the same spot all day, every day. Now, when it comes to the other levels, they are a little more fluid because they're based more on than just open interest. It calculates, the amount of trading activity and all of that. So if we go into spot gamma, a logged in spot gamma, there we go to indices, I can bring up that same tool. Unfortunately, you can't see these unless you have an account to be able to go in and do what I'm doing. But that's the nice thing about having an account. I'm going to turn off the call and the put wall and turn off price. What we're left with is the uh, volatility and the gamma index. Now we'll just zoom in. But again, these are daily levels. You can see how the volatility trigger didn't move for days. It was just in the same spot over and over and over and over. And down here with the gamma index, it barely moved here. And then from one day to the next, it's shifting up or shifting down. But throughout the day, those are stagnant levels that we believe are in place all day. The cool thing is, especially since you are an options trader, so you understand what you're looking at, is if the call wall or the put wall is at a particular level or the gamma level, whatever it happens to be, you can go into your own underlying broker and say, okay, well, they said the SPX, gamma level is at 7,000. You can come in and look at 7,000 in the options chain and see, is it getting heavily adjusted? Right? Are they exiting out of it? They selling a lot of those positions? Are they buying more of those positions? What are they doing with them? Because you already know where to look. you know what strikes should be getting hit. If they're going to move that call wall or gex level, then that level is going to get traded activity. Then, of course, you can right click on these, at least on Thinkorswim, and you can set alerts based on whatever you want. So, we could go in to the 7,000 level. At this late in the day, it wouldn't be worth it. But, early in the morning, I could come in, right click, set an alert, and that alert can be based on options Greeks, not just price. So I can now base the alert on, a spike in volatility, a drop in volatility, increased or decreased delta, whatever it is that I want to set the alert on. So here where it says price, do I want it to hit on the ask, on the bid? No, how about I want it to hit when delta is at or below whatever level, right? We know delta of 50 is like at the money. If the 7,000 strike is out of the money, but I want to know when it's moved into the money, I can just set an alert right there and say, let me know when the delta reaches, 0.5. And now I would get an alert when the delta is at or above 0.5. That's pretty handy. You can set alerts on all of those strike levels, the dealer gamma levels that I post in the chat, to be able to see if they are trying to move them. Now, Volland, their tool is really sophisticated, and they are direct competition with Spot Gamma. And man, they make bold statements. They say that Spot Gamma is junk. That's a really bold statement. Their argument is that dealers don't behave the same way all the time, and that we can't rely on what they call the gex regime or paradigm to exist at all times. That sometimes we're going to be in one of the other paradigms, and the other names are like the Bank of America paradigm or the inverse gex paradigm. And so they argue Spot Gamma just has one logic, and their logic never changes. They never check to see if it's proper for their logic in this current environment or not, and that makes them a big liability and fallible. Their argument holds water, but their levels are still really solid, and they got amazing data. So I don't consider them junk, but I guess it's just perspective. Volland is a seriously sophisticated platform. There's still a lot about this that I don't even understand. And I've been working with these guys. It's a part of one of my engineering products with the development teams, trying to make this tool more retail friendly. And it is complicated. The good thing though is that these guys have an academy that will teach you how to understand their tool and then how to use their tool. I don't know if the academy is free. Their tool is not free. The one that I have access to is $1,500 a month. I believe they have a retail version that goes for like 200 a month or maybe 250 as the base end, low end starting point. But yeah, it's some sophisticated stuff. If we go out to their website, should be just the landing page. You can see it in blue here, the Volland Academy, and then of course the pricing. You can pay for the API link and like build it out into your website and do all sorts of stuff if people wanted to. The resources button is really good. They've got a lot of good YouTube videos, and these white papers. So if you wanted to understand more about dealer positioning and gex and the paradigms that they talk about, then it's in that white paper. So I'll put that link in the chat too. And you can use Voland for random stock stuff. You can. I think that's kind of like trying to swat a fly with a shotgun, but you could do it. So if you're looking to try to put together a list of stocks to trade, one of the things that you could do is the step-by-step approach that I take in the mornings. So hopefully you guys watch the morning briefings. You kind of see what I go through on a day-to-day basis. But in the morning briefing, we finally work our way around after looking at the indexes and the daily and the weekly and the hourly, and everywhere we go, we end up on the watch list columns. And these are not necessarily just a list of stocks, they're more of a list of indices and ETFs, ETNs, and they cover a really good spectrum of things that are out there. It's not everything, but I try to put as much as I can in here. I've got stocks, bonds, and country specific ETFs, and then groupings and commodities. And when I'm looking at this in the morning, I'm trying to find what's hot and what's not. And this is just a good starting place to point me towards a particular basket of stocks: airlines, pot stocks, gold miners, something. What the hell is moving today? So that I can try to see what might be a tradable opportunity for me. Because I like to trade momentum when I can, right? It's not the only thing I trade, but if something is hot and it's breaking out and it's running, well, hell, I want some, you know? Take Alcoa for an example, right? I mean, look at that. Come on. That's pretty. You know you like it. I like it. I'm gonna make that a pinup poster. So the idea is that it takes time to slowly build out your list of stocks and then to become more and more familiar with the names that you find so that every time you come across that name, you're not sitting there going, wait, what is this company? What do they do? I don't, what are they, who's their peers and who's running the show? What country are they in? It just takes time. So if you look at Alcoa, by the way, you can see that they're not back up to this previous level. If 80, then 100, right? Well, we haven't gotten onto the other side of 100. So right now, right now we got to get back to 80. But 100 is still in the cards for this one. Now I'm on the monthly, so I got to get off of that and go to the weekly because my monthly uses a log scale, and log scale breaks things. So here's a not log scale chart. We'll just run it from the lows down here back to the previous highs. And you can see $60 lines up really well. And we're getting that breakout above 60. This is too far, too fast. It's not going to hold. It's going to come back in. But I do like it back to 100 in time, right? In time. It's got a lot of work it needs to do. And this space is doing really well, right? So you could take that one name and run with it, but you could also look at other names in the same peer group. There was a Discord command for peers. It doesn't work anymore, I believe. I'm going to try it again. And no, it's gone. Probably in one of those that is discontinued now. But the good thing is we still have AI, so you can just jump out to your favorite AI. I'm just going to use Grok here. I've been using Gemini quite a bit for some coding stuff, but Gemini, Grok, either one, it doesn't matter. Chat GPT, whatever, they'll all get it done. Someday I'm going to get me a pinky again and my typing will improve radically. So I told it, hey, I was looking at AA stock and now I'm interested in its peers. Give me some US companies who are peers with AA. That's what I asked from the AI here. CENXKALU. These are considered peers or direct competitors in the aluminum sector. And just like that, right? So now we have two more names that we could go and look at and decide, do we like them? Do we not like them? Do they have better options? Maybe those would be a better trade than looking at AA, right? Maybe they got a better CEO or a better balance sheet, a cheaper price. We just, we got to go look and see if they are of interest at all. So there's CENX. You can see how it's behaving the same way. This is a hot space, right? It's on everybody's radar. It's getting a lot of attention. And then KALU kind of looks familiar, right? If you if you weren't aware of these and you missed out on the run and you're thinking, well, what do I care? It's already run. It's too late. One, it needs to pull back so you can trade that. Hey, Marzita, you have a good weekend, dude. And thanks for hopping in. I didn't hear from you much this week, so it's just good to hear from you. Man, I did the hardwood. Well, I did the flooring in our house, but when it came to carpet, I hired it out. I did not do it. I said, screw that. My knees hurt so bad from doing there was no way I was doing the carpet. I said, screw it. No, I'm paying. Hey, check out YouTube. They got this great contraption that you strap on, and it's like a collapsible thing behind your knee so that when you go to squat, it folds itself out into a triangle and your butt rests on it. And yet when you stand up, it lays flat again. I don't remember what the damn thing is called, but I thought if I got to lay that carpet, I'm getting that damn thing. Yes, sir. Have a good one. Yeah. The For anybody left, if you're looking at this thinking you missed it, you still have upside potential. The space is still hot, but it needs to breathe, right? It needs to pull back. We don't want to guess and try to figure out when that fall is going to happen. So what we could focus on is looking for what would my trigger be to get a trade in something like this. And it's not just this name, right? It's this kind of trade. How do we trade this? Because then that just becomes a strategy that gets put into the list. And now you have a new strategy. I'm looking at it on the weekly, but we have the daily here too. That was supposed to be a daily. So we got the daily, we got the weekly. If we're looking for a tradable signal, moving averages make for a pretty good signal. Look for a breakdown. That could be a good play. If you want to be more aggressive and do something a little more consistent, I like to use price itself. So you would be looking for one of those big gap up days where it starts gapped and then it falls. We call it a red to green day, green to red day. So you're going to be wanting to look for a high breakout day off the tops. This one was a high breakout day, but it just kept going, right? So that started out as something that would have triggered your alerts, but it never failed to let you in. So it wouldn't have been a losing trade because it never turned into a trade. This one, let's zoom in here a little bit. This one started the same way. Big gap up. So it opened way up here. It did a little rope a dope and down it went. That triggered a tradable opportunity. Now, it didn't get very far, but it did get through that 3 period moving average. And if you held it into the next day, then you could have almost made a $10 move there. But it didn't follow through because this stock isn't done running yet. This was like a correction in time, and then it just started running again. So you can look for that opportunity to short this sucker by looking for the reversal signal. Since that's a weekly, the gap is going to need to be on Mondays. Well, isn't that cool? Because it's Friday. So we can be looking for on Monday this particular stock to have a really big gapped up Monday. Um, when we're just on a regular chart, I like to add the weekly expected move, not because I really care about where the price is in relation to where the lines are, but it shows me where Monday is. I know it's a little sneaky to do that, but hey, it works and I like doing it. It just makes my life so much easier. That's Monday, that's Monday, that's Monday. You know what I mean? Like I really like that. That's a nice little thing that I've gotten used to over the years. And when you're trying to figure out what's going on, knowing where Monday is really helpful. So on Monday, we're going to want to see a really big gap up. And we've got some good examples of a really good gap up, but they didn't follow through. Right. So here, for an example, just this week, we had a small gap up, but a really big run and a rope a dope. All right. It flipped over and ran back down, but it didn't do anything. We didn't break down. So no tradable opportunity unless you wanted to try to short it off the weekly expected move edge, which is a trade strategy. It's known, it's validated, it's been around for a long time. It works. Here's another Monday, same thing. Big gap up. We opened up here. Then we did the rope a dope. But again, it's a really bullish stock. We didn't fall down. You didn't even trigger into the trade, so you didn't lose any money. It's just on watch. Now, this is one name with one setup, and there's peers, right? We had that other name that had the same setup, CENX. So we can be looking at both of these, and if one gets to pop up on that Monday, so is the other. If they're going to dump and crash, they're both going to do it. The space is going to do it. AA is going to do it. And you can watch one while trading the other, watch them both, watch all three. That way it is confirming your bias. If they're all bleeding, they're all selling off, and they're all picking up speed to the downside, you got to be more confident about the short you're in. Plus, how long is the short going to last? Since these are bullish, it might not last very long. Maybe you get a day and a half short, then you got to get out. It's good enough for me. $7 to $10, and you swap out and get something else. You could even just take the other side and hop back in on the long since it looks like the long isn't done yet. So that just, gets put on the radar. You could filter out those names and see which one has the better options. This one, for an example, doesn't have weeklies, and that means I don't want to trade it. It's got $1 wide strikes. That's good, but 50-cent wide bid ask spread, and their dime size prices. Well, screw that. I don't want to trade that. There's a nickel over there, but this is some mispriced trash. I'm not putting my money in this thing. So I wouldn't even have to go any further right there. I'd trade the stock, I suppose, but I wouldn't mess around with its options. Now AA, on the other hand, it's got weekly options. It's not crazy expensive. It's $63. $1 wide bid ask spread, 20-cent wide, excuse me, $1 wide strikes, 20-cent wide bid ask spread, and you can see it's penny increment options. That means that you can fill it for 291. You're not stuck filling it at 295 and 290, 285 and 280. That's nickel increment options, and that sucks. You want penny increment options, especially if they're small stocks like this. You can make your watch list of penny increment options. That way, you know the names that are in your list are penny increment options, right? See, penny priced options. This is my basket of penny increment options, and then I can intersect that with whatever I want. New highs, for an example, or new lows, or stocks that are breaking out. Uh, Breaking down, crossing a moving average, whatever. That's my basket. So you need a basket. And then when you have free time in your day, in your week, in your learning schedule, you go in and you evaluate the names that are in there. It's it's a lifetime of absorption, right? It's not like you got to get it all done in one day. Learn the names over the years as time goes by, slowly just picking up what each one of those companies does that's in the list until you're good. You don't have to, right? I know it's usually what I get from people. Do I have to do it that way? No, you don't. You could just see a pattern or a signal or a setup and trade it. You absolutely could do that. Why not? I have found that it doesn't suit me, right? I don't like doing that. My trades tend to have better success when I understand what's going on, and I lose less money because I can get out quicker when I understand what's going on. I'm looking for something. I can't seem to find it, but that's usually how it goes. All of these are scanners, by the way, and I don't use 95% of them. They're just scanners that were developed at some point because somebody asked, and then they just stayed in there. So if you don't have one, just reset this. Every broker is going to be different, but we're on Thinkorswim. You can scan in on the front here, and Thinkorswim has penny increment options as a watch list. It's under the public list here. Penny increment options right there. So now I know that every company that is in this list of 380 names, these are all penny increment options right there. All of those. I'm going to share this with you guys. That way, if you're not on Thinkorswim, you still have a list of penny increment options. But let's sort them by market cap. In descending order. There we go. Imagine that Google and Nvidia and Apple and Microsoft and Amazon and Tesla are at the top, as they should be, right? So the list isn't stuck this way. You'll be able to alphabetize it or do, whatever you want with it. But we're going to save it as a list. And now we can export that list. I thought I had a watch list already up, but I guess I don't. and we can export to a file. A basket of stocks with penny priced options. This is a CSV file that I'm going to share. If you don't have Microsoft, you can open this document using Google Sheets. That should be fine. If you're going to use it on TradingView, you need to open it first and just copy all the names in one shot and put them on TradingView. Don't try to upload a CSV file to TradingView. All right, so there is the list. And just to simplify this for some people, I'm going to make a text document out of that. With that list that I just shared has the net change, bid ask, and all of that stuff in it. And that might be a bit more than somebody is wanting to chew on. So here's the other side of that, and it's just a text document. Um, kind of. So let me show you what you might be looking for. On the Bullish Bears website, I did videos over the years on trading options, what to look for, all of that good stuff. And you're gonna want to go through that options library, the next level library. And then on the Discord, I've got um, these videos. They're older and they're not on the Bullish Bears. Nope, that's not what we're looking for. There we are. Now these say day trade tips, but they're just straight up options tips, not necessarily have to be employed on day trading. But that video, and in the video is the link for number 2 and then the link for number 3. It's in the description, so you can just follow from one to the next to the next. Is tips and tricks on how to read the options chain to quickly make a trade. The thing about quote viable options is whether or not it meets your criteria, right? Like for me, I'm a bit of a snob when it comes to options. I don't want illiquid turds, and I'm picky. So if it's not liquid, then I don't want it. Well, the thing about liquidity is it's not one thing, right? Like volume is not the entire center of liquidity. So if we're going to define quote liquidity, then what's our measures or our markers? For me, one aspect of liquidity is, does it have weekly options? If it doesn't have weekly options, then it's not liquid because the company earns weeklies by having so many strikes that the brokers start pumping out the weekly criteria. So, no weeklies, it's not liquid. That's step one. When you open it up, how expensive is the stock versus how wide are the strikes? If it's less than $100, less than 200, less than 250, maybe even 300, it should not be $5 wide strikes. It shouldn't even be $2.50 wide strikes. I expect $1 wide, maybe 50 cents wide. So, you go to something like Apple, $2.50 wide, it's a $250 stock. This is almost not liquid enough. But I mean, it's Apple. Everybody knows Apple. Um, but how wide are the strikes? How expensive is it? Definitely don't want to find a $50 stock with $2.50 wide strikes. That ain't gonna fly. That's an illiquid stock. The next thing is, does it have penny increment priced options? An illiquid stock will trade in nickel increments or even dime increments. And all we're talking about is, does the price show 1.18, 1.97, you know, 0.08? Because there's penny numbers in there. If it's all fives and zeros, then it's nickels and dimes. And that means you have to slip to get in and you have to slip to get out, worse than it already is. Then there's how wide is the bid ask spread in between, each of these two numbers on each strike. And all of these things are a representation of liquidity. So we can look at open interest, we can look at volume, but that's not enough. Add these things and look at open interest and volume, and now you've got a better picture of what liquidity looks like. It helps too if you trade a familiar product, right? Like SPY has a lot of options, a lot of options. This thing is running millions of contracts every day. We are at 9,030,000 so far, and that's just the SPY. Then there's the SPX, the ES, the OES. There's so many things that is quote S&P. But 9 million contracts traded today. That's a little heavy, by the way. It's 200% greater than the 5-day average options volume. But who's counting, right? But if you go to some no-name Joe Schmo company, is the options you're seeing that day high or low, right? So let's just pick something like, let's put Alcoa in there. Alcoa is trading 18,000 contracts today. Is that high for Alcoa? No, it's a little light. Well, how do I know that? It's not like I know every single freaking company out there. It's right over here. So sizzle is a fancy word that just means 5-day average. Thinkorswim made it up. They just created it out of thin air. So they got the put sizzle, that's the 5-day average put volume, and they got the call sizzle, which is the 5-day average call volume. You got the sizzle index, which adds those two together and then does a little fancy math so that we can look at just the sizzle index. And if it's underneath 1.0, then we know we're not even getting the 5-day average today. If we was directly at 1.0, we would know that today we have matched the 5-day average. And then anything above 1.0 is we're above the 5-day average. So we're not even hitting the 5-day average right now. Then we can see, where the trades are coming in, call side, put side, delta structure. That way, if you are looking for a trade, say in CENX, then you can evaluate whether or not you're shopping around in the right space. Now this is a scannable watch list. It is one of the very few scannable lists that I run, and it is my favorite. I've got paid programs, paid services that I could use. Some of them that cost well over $1,000 a month, and yet this is my favorite, and it's free as long as you got Thinkorswim. I made it. I've made videos about it. If you have Thinkorswim, you can make it. It uses a watch list column called high-low graph. So just type in the word high, you'll see it's right there. High/low graph. If you was to open the code for this thing, you'd see there's not much to it. It's just that little bit of information right there. I don't know. I code Thinkorswim, and I don't even know what the hell this is coding. But that's okay. It doesn't matter because to this day I still don't know what it's coding. But I love this thing. When you load it, it's going to sort things from 1 to -1. That's it. One, like the decimal of, so a half, 0.75, all the way up to 1, and all the way down to a -1. If it's at a +1, the green will be maxed out all the way. And if it's at a -1, there'll be a red side and it'll be maxed out all the way. So what I did is I took that code and I sorted it to say, look, just show me the things that are in the last 10th. So 0.9 all the way up to 1 and minus 0.9 all the way down to -1. Once you have that scanner built, you can point it at whatever you want. So we've already got Alcoa, or not Alcoa, but we've already got the scanner built where we're looking at the basket of stocks on penny stocks, penny priced options, not penny stocks. Got to be specific with that. So here's the high low 90. This is looking at any name that is hitting 0.9 or higher and is a penny increment option. If it meets that criteria, it shows up in the list. That scanner right there is this right here. It's the same thing. I just leave it running all day rather than looking at it in the scan tab. So if we go in and look at some of the names that are populating in there, well, AA's on the list. You'll find that it's going to bring things up that are getting ready to break out on the day or that already have broke out on the day. Now the day's almost over, so this isn't really helpful, but it'll do it all day long. Like it never stops. There's nearly always a name in the list. If we're going up, then it's the green side. If we're going down, then it's the red side. But even on a bullish day, you'll find names on both sides. The list just might be kind of small. You know, if we're bullish today, the bear side might be almost empty and vice versa. So that can get you pointed towards, hey, what's getting attention? And it is intraday. It's not, swing trade stuff on its own. But you can look at what it is, what it's doing, and then go out to the daily and the weekly and see if it's swing chart or if it is swing tradable. Yeah, let's build that out. All right, so we got a SPY. What do you got here? SPY trade using today's options. Cutting it close, ain't you? Um, oh no, you got January 23rd. Okay, you got time. January 23rd options, 685 put. I see what your problem is. You can't buy a put and sell the same put. You got to change your strikes. All right, let me see. Sorry, guys, I can't type and talk. I suck at that. Someone asked about a spy trade, so I'm trying to build it out and see what their trade would look like. All right, what else you guys got? Because I won't be able to do that while I'm streaming. Nothing. Yeah, I get that. Um, it takes time. Some of the things to focus on with options is getting comfortable with a sort of checklist for what you want to trade or how you want to trade it. There's certainly no wrong way to go, but let me see if I can find it. I've got an example of what I'm saying. I put together a sort of criteria for myself over the years, kind of a list of questions to ask. And I haven't used it in a long time because you outgrow it and then you don't need it. Say I got a few discords. Maybe it's in my playbook. Yeah. So, okay, here's a good example of what I mean. So, this is my credit spread type trade. When I go to put on a credit spread, I know exactly what my rules are and what my criteria is. Stocks can't have an earnings within 30 days of my trade, no dividend within 30 days. I when I'm looking at the stock chart, I can't see any big parabolic moves, no big gaps. The company needs to be more expensive than $10, right? I got this list that I put together over the years that just matches my needs, right? That th- this isn't about right or wrong, good or bad, just what I know that I want to do and or what I don't want to do. So I not as much as I used to, but yes. So like AMD used to be a $10 stock, and we would day trade AMD getting in and out and out and out. And of course, things like a couple of pot stocks back in the day. And so yes, the answer is yes. But I got to say, all of that was before the micro futures came along. And now that you guys are a lot of you guys have probably never traded before there were micros. But for those of you who were here before the micros, you'd know that if you had a small account or if you just didn't really want to risk a lot of money, then we would day trade in smaller stocks, right? We'd get in and out all day long and just play the move as long as the move was going and have a good old time with it. But then micros came along. No PDT, no handicap, no options decay or anything like that. You can just get in and out all day long and it's low risk, because it's micro futures. And once you get that, you look at everything and you think, why would I even bother struggling with a PDT and some low float penny stock trash or some $900 company and I can only get 6 shares, and you know what I mean? Yeah, and the tax advantages too. So, yeah, I do, or I have, but not recently. I can't remember the last time I just went and jumped into a stock day trade let alone a stock day trade that I got in and then out and then, in and out a couple of times in the same day. It's been so long I can't even remember the last time I did that. But you absolutely could. And if you're not trading futures, then you absolutely should trade that way. Because why not? If you find a stock and it's just making amazing moves on the day, and you've gotten out, you've got some profit, and it's making a new move, and you get in and get some more profit. Why not? That's what we do in futures. It's what you should be doing in stock if you're day trading, right? And you can add options to that too. There's nothing wrong with it. All right, let me see if I can build this. Yeah, and with that in mind, if it's all I am a destination trader, 100%. I love that word, and I love that approach. If you have the visual and it's clear and you can see it, heck yeah, you should trade it that way. You should totally take advantage of it. Nothing wrong with that whatsoever. I'm just trying to build this trade real quick. So I'm still here. Just I'm rushing because the market's close to closing. So you're buying the 685, you're selling the 685. You got the Jan 23 and the February 6th. Then your price should be $3 and something. Where did 306? I'm almost done, guys. All right. Sorry about that. Oh, someday I'll get some what do they call it? The stenographer. And they can just hang out next to me and type everything out. That's what I need. I need an AI stenographer. So there's this popular misconception that options data or options information can steer you to tradable opportunities. To a very small degree, yes, that's true, which is why you can use the unusual options activity tools built into the Discord, like the Trading Tick stuff, to find you things. But I'm going to tell you, you have to be nimble, quick on your feet, and be willing to trade exactly what you see and not want to slow walk it and pick different strikes and make it cheaper or some other explanation or expiration. You have to trade what is getting hit because it's that one thing that's getting hit and it needs to be the one that you trade. I've seen a lot of people try to trade these alerts and they get cute and they say, oh, well, this is a Google call, but it's way too expensive and I'm not going to trade that. I'm going to trade this other thing because it's cheaper. And then, of course, the trade doesn't work out. When you're trading unusual options activity, you want to trade the strike that is getting hit because the uh, attention to that one strike is going to jack the implied vol up on that one strike, and it's going to accelerate its options price change so that you can make your quick buck and hop back off again. If you start shopping around and building the trade and making it different things, trying to get it cheaper or less risk or farther out in time, then you're just building your own trade based on some other metric other than the unusual options activity. This criteria, by the way, this criteria is for one simple options strategy. It's my put credit spread strategy. But if you're going to trade a consistent options strategy, it helps if you write down what your criteria is so that you stay consistent. That way, you already have the rules and you can check your list to make sure that the thing you're about to trade meets your rules. For an example, when I was newer to options trading, I would forget to look for earnings. Serious, I would forget all the time. And then I'd get in the trade and I'd go back out to the chart because now the trade is done. I'm not rushed, I'm not in a hurry. And I'd go back out breathing a sigh of relief because I got my trade on, and then I'd realize, shoot, this thing's got earnings next week. I'm not supposed to be trading that thing. It's way too close to earnings. And I wouldn't want to close it because I didn't want to burn a PDT. So then I'd hang on to it, wait till the next day. What a mess, right? Just because I would forget, don't forget to check for earnings. So when you put together a little bit of a list, it can help keep you consistent because, you go in and you look at the list. Is it within earnings? Where's the dividend? After a while, you don't need the list. It'll just be in your mind and you'll do it automatically and you won't even think about it. But so those videos on the Bullish Bears YouTube, it goes into checklists like this. Not my list that I built here, but more generically, different delta, different criteria, things to look for verticals, long calls, butterflies. So that way you at least got the bare minimum criteria and then you can kind of flesh it out on your own. There's no wrong way to go, right? And some of the best criteria that I've ever found actually came from watching videos like tasty trade videos. I don't use their criteria, but the things that they focused on made me focus on them. So they were looking at delta, I looked at delta. I don't use their delta, but I use my own delta. But at least I knew, oh, maybe I should think about what delta criteria I should have, or maybe I should have a different strategy for short duration stuff and then another strategy for long duration stuff, and a leaps strategy and a calendar strategy and a inverse iron condor strategy, so that you know what's out there and you know what the possibilities are. It's funny, I was talking to somebody today and they said, well, there's just not a lot of trades. They were really frustrated. Really? Like, I just can't find a trade. And I was flabbergasted, floored. How can you not find a trade? There's so many trades out there. Everywhere you look, there's another trade. You can trade anything, anything. So, one of the best lists that you could trade is the Dow Jones, right? Just Here's a watch list that's empty. Just go in and bring up the Dow Jones. You might not know every name on the list, but I bet you probably do. I bet you do, because they're household names. Walmart, Verizon, Microsoft, McDonald's, Coca-Cola, JP Morgan, Honeywell, Home Depot. These are really popular home brand names. Caterpillar, Boeing. That's a really good list to start with. You don't have to trade them all, but find yourself a familiar set of names. The Dow Jones is considered the blue chip stocks, right? They're like the blue ribbon, the best of the best. Now we know that that's not true, right? The stocks come and go, they get knocked off the list, better ones replace them. You get bad earning cycles, or a company like Boeing that kills entire families when their airplanes fall out of the sky. So whatever. It's not like they're the best in the breed, but they're considered the blue chip stock. So they're not companies that's going to go out of business next week. They're not running pyramid schemes and trying to, swindle their investors. They're not going to get bought out by some other company, at least not very often. And they're a more stable product to start with. They all have a relatively decent earnings cycle, and they are in the news often, which makes it easy to find information about them. And it's a really good place to start. Start there, and every single one of these names is a tradable opportunity. Every one of them. Now, of course, we are getting close to earnings season kicking off, and that starts with banks. So you might want to, maybe put the banks on the back burner, or I don't know, maybe trade the banks first, just jump their earnings. But every single one of the names on this list is a tradable opportunity. Every one of them. Because in options, we can go long, we can go short, we can go sideways, we can go long and sideways, we can go short and sideways, we can go long and short, but not sideways. All of those are a viable opportunity, all of them. So every single one of these on the list is either moving up, moving down, or not moving at all. And that means we can trade every single name on the list. Of course, you have to be concerned about diversity. We don't want to put this is a list of 30 stocks. You don't want 30 stocks of long trades. What if we go down? Right? You don't want 30 stocks of all short trades. What if we go up? So you want to diversify, and that's perfect because some of these are bleeding off and they're short, and some of these are long trades. So it's going to kind of split itself up for you after all, right? And even if it isn't, you could get into beta weighing a portfolio, or you could choose to keep balance. So if you put on a long, the next trade is a short. If you put on a short, then the next trade is a long, and you just keep things balanced that way. Every single name on this list is a tradable opportunity, except for maybe Travelers, because I don't think Travelers has weekly options. Yeah, see, no weekly options. but the rest of them should have weekly options. Maybe not very liquid weekly options, but they should have them. Now, what people get hung up in is, well, I want the trades with high conviction and I don't want to lose. Yeah, me too. That's why I don't trade every name on that list. But I could. I'm risk averse. I'm not willing to go hunting for extra risk that I don't need. I know that we got OPEX next week and we're 2 weeks away from the FOMC and 2.5 weeks away from a government shutdown. I'm not interested in loading up with a bunch of new trades. When I tell people that, they're like, yeah, but I'm learning how to trade and I want to trade and I got money in my pocket and time to burn and I want to trade something. So give me something to trade. And they don't care. Like, what about all this risk? I don't care. I want to trade. Fine. There you go. 30 stocks right there. Take a trade. It won't matter if it's breaking out to all-time highs, if it's sitting on support, sitting in the middle of support and resistance like CVX is. It's not at the top, it's not at the bottom, it's sitting in the middle. So if you don't care because of FOMC and CPI and we got government shutdown and OPEX next week, if those didn't deter you, then who cares if the stock isn't on support or resistance or breaking out? Trade it wherever you found it. So what? We got a IX10 on Bank of America. That's just a fancy way it says I inside day more than once. So we're on the second inside day. That makes it IX10. Um, it's at the top of a really nice run. Really good pullbacks here. I would measure this distance and see if it matches that distance, and then see if it matches that distance to see if the pullbacks are getting deeper and deeper or shallower and shallower. And then I would measure the run up and compare it to that run up and then compare it to that run up just to see if each new leg up is slowing down or speeding up. And then, of course, you can measure that next leg up to kind of give you an idea of where it might be headed next. Did you trade this with calls or puts or stock or both? Long calls only or call vertical? Short term, long term, 3 days to expiration, next Friday's expiry? That gets you on the other side of the earnings window, right? Since we got the earnings on the 14th, that jumps the earnings really well, and gets you a nice level of volatility too. We can see the earnings volatility is at 31, and the next volatility out is 28.9. You've got a 28.4. So good level of volatility. The concern is if you trade a call that has a high level of volatility and the stock rises, there's volatility to strip away from that call and you can get vol crushed on the call. But that's okay, right? If the stock moves far enough, fast enough, the call will still monetize. They'll just be stripping the volatility out of it as fast as it makes money from the price of the stock moving. So it's a little bit of a concern, but not a big hang up. If you had done a spread, you could have tried to protect against that a little bit. Um, but that it does no harm, no foul. These $2.50 wide strikes on a $50 stock is really poor. That sucks. But the $1 wide strikes is better. We can see that the call side is $2.50 wide. They're dirty little dogs. And when you even get just a little out of the money, it turns into $5 wide strikes, which is even worse. These two strike 65 and 70 are complete trash. You want to leave those alone. But all of these suck because it's $2.50 wide on a stock that's less than $60. I've got an earnings chart that might shine a little bit of light onto what could possibly happen to this stock on its earnings. We'll look at 5 years, and we're just going to scrunch all those columns together because it makes it easier to read. And we'll just move this stuff down so that all we have is those columns. And now, what can we see about Bank of America and its earnings? We're looking at 20 earnings, and Bank of America has beat 17, missed 3. Me too. I'm going to hop off after this right here. Always appreciate you hopping in, Hugo. I'll see you next week. I hope you have a good weekend. The pre earnings ramp is that 21-day window in front of their earnings. It has an average positive move of a 1.5%. And then in the 8 days before earnings, it has an average move of 1.67%. So about a $1 move on average into earnings. Positive moves. Um, when it does report earnings, how many times has it had a move between 0 and 5% within that 8 days after earnings? 5 times. 5 out of 20. How many times did it have a big move in those 8 days, bigger than 5%? Also 5 times. So out of 17 beats, 10 times the stock went up after earnings. 7 times it beat and went down anyways. 2 times when it had a negative move, the move was greater than 5%. 8 times when it had a negative move, it was less than 5%. So 10 times out of 20 earnings, where it beat 17 out of 20 times, 10 times it went down, even though it beat. That's good to know. So it just gives a little bit of color on the earnings history, right? Having the history of what a stock does for its earnings is really helpful because the popular opinion is that stocks really move on earnings, and it's not true. If you think about the 2,000 plus stocks that are out there, most earnings, the stock makes a little bit of a move and it comes back to where it was. That's what most stocks do. So the outliers are the 2 to 3 or 5 stocks every cycle that get some big move. And then that fuels the dream and feeds the hype that we're going to get, another earnings season and stocks will make these great big moves and we'll all get paid. Most of the time, it just unwinds the move within a couple of days or up to, 8 days. The stock's right back where it started again. It unwinds it a lot. If you like earnings, though, there's a really great company called the Earnings Whisperer. These guys are the preeminent earnings data center. Everything about trading earnings, the background, the logic, the strategies, just these guys are legit, but it is not cheap. There's also cheaper versions. It's not as good, of course, but there's I think it's called the Whisper number or the earnings. Now, maybe it's the Whisper number. Yeah, these guys, not quite as good. And obviously, they're trying to knock off Earnings Whisperer. But these guys have some really good earnings data as well. And it's just understanding what a particular stock's behavior is during an earnings event. It's not to say that they can't misbehave and make bigger moves than they are expected to, but on average, stocks tend to behave in a pretty regular way. And then it stands out when there's a lot of IV that's unusual that tells us we could expect an unusually large move. But yeah, it, for those traders who want to be earnings traders, there's some really good tools out there. Me, I like to trade into the earnings or after they report, trade out of the earnings. To me, that's the most safe isn't a good word, but the most steady way to play it. Rather than trying to speculate on how the earnings itself is going to go. I think they're going to do good, I think they're going to do bad. I'm going to try to go long or short because that hasn't really panned out that well. I've got an amazing track record of losing earnings trades. I've given up on trying to guess which way it's gonna go. Hey guys, it's Friday. I've had enough. Um, Always love the participation. If you guys have topics that you want to hit on, charts that you want to look at, macro things you want to dig into, I always am interested in recommendations or ideas for topics to stream. I hope y'all have a good weekend. I'll put the recording in the replay channel, and we'll see y'all next week. Absolutely. Glad to do it.